How inflation quietly destroys your wealth and how to fight it. Inflation is often called the silent thief, and for good reason. It doesn't make loud headlines every day or cause immediate panic, but over time, it quietly erodes the purchasing power of your money. Most people feel its effects without fully understanding its impact. You may have noticed that your grocery bill has gone up or that your salary no longer stretches as far as it used to. That's inflation at work. But how exactly does inflation destroy wealth? More importantly, what can you do to protect yourself? Let's explore this quiet menace and discover effective strategies to fight back. What is inflation? Inflation refers to the general increase in the prices of goods and services over time. It means that, gradually, your money buys less than it did before. For example, if inflation is at 5% annually, something that cost $100 last year will cost $105 this year. While 5% might not seem like much at first glance, over the decades, it compounds and significantly reduces your purchasing power. Inflation is usually measured by indices like the Consumer Price Index, CPI, which tracks the prices of a basket of everyday goods. Central banks, like the U.S. Federal Reserve, aim for moderate inflation, around 2% per year, as a sign of healthy economic growth. However, when inflation gets too high or is persistent over time, it becomes a major threat to your financial well-being. How inflation erodes your wealth. 1. Declining purchasing power. This is the most direct effect of inflation. If your money remains stagnant, say, sitting in a savings account earning 1% interest while inflation runs at 4%, you're effectively losing 3% of your purchasing power annually. That means every dollar is worth less in terms of what it can buy. Over 10 years, the cumulative effect is dramatic. 2. Savings lose value. People often assume that saving money is a safe strategy. While it's better than nothing, traditional savings accounts offer very low interest rates, often below the inflation rate. So even if you're not spending your money, its value is shrinking. For retirees or those on fixed incomes, this can be especially devastating. 3. Fixed income investments suffer. Bonds and fixed annuities provide steady payments, but these payments don't increase with inflation unless indexed. If you're earning $500 per month from a bond and inflation rises, that $500 loses value every year. It may not cover the same expenses it once did. 4. Higher cost of living without higher income. Wages don't always rise in line with inflation. If inflation is 6% and your salary only increases by 3%, your real income is falling. You might be earning more on paper, but you're actually getting poorer in terms of buying power. How to fight back against inflation. Thankfully, there are proven strategies to shield your wealth from inflation's silent attack. Here's how to protect yourself. 1. Invest in the stock market. Historically, equities have outpaced inflation over the long term. While stocks can be volatile in the short run, they tend to deliver returns that exceed inflation in the long run. Companies can pass higher costs on to consumers, which helps their profits, and your investments grow over time. Index funds and ETFs that track the broader market are particularly effective for inflation-beating returns. 2. Real estate. Property is often a strong hedge against inflation. As inflation rises, property values and rents typically go up as well. If you own rental properties, you can increase rent over time, protecting your income stream. Plus, if you took out a fixed-rate mortgage, you're effectively paying back the loan with devalued dollars. 3. Commodities and precious metals. Assets like gold, silver, and oil tend to perform well during inflationary periods. Gold in particular is seen as a store of value. While these assets don't produce income, they can preserve wealth when fiat currencies lose value. 4. Treasury inflation-protected securities. TIPS. TIPS are U.S. government bonds designed to protect against inflation. Their principal value rises with the CPI, and they pay interest twice a year. They're a low-risk, low-return way to maintain purchasing power and are especially useful for conservative investors or retirees. 5. Cryptocurrency. Though still controversial and volatile, some see cryptocurrencies like Bitcoin as a hedge against inflation. The idea is that Bitcoin has a fixed supply, unlike fiat currencies that central banks can print at will. While not without risks, crypto assets have attracted investors looking to diversify and protect against currency devaluation. 6. Increase your income streams. Another way to fight inflation is by expanding your income. Whether it's through side hustles, passive income sources, or developing skills that command higher salaries, increasing your earnings can offset inflation's bite. Inflation is less of a problem if your income is rising faster than prices. 7. Stay educated and adjust your budget. Awareness is half the battle. Monitor inflation trends and adapt your financial plans accordingly. Review and adjust your budget regularly. Eliminate unnecessary expenses and look for areas where you can save without sacrificing too much. Don't wait. Start now. Inflation isn't a one-time event. It's a continuous process that affects everyone. The earlier you recognize its impact, the sooner you can take steps to minimize the damage. You don't need to be a financial expert to protect yourself. You just need a clear plan. Start by reviewing where your money is currently held. Is most of it in a low-interest savings account? Consider moving a portion into investments that have historically beaten inflation. Take advantage of retirement accounts like IRAs and 401ks, especially if your employer offers a match. Explore real estate, gold, or diversified index funds. Final thoughts. Inflation is sneaky. It doesn't knock on your door or make sudden demands. Instead, it chips away quietly at your wealth, dollar by dollar, year after year. But by understanding how it works and taking proactive steps, you can fight back and even come out ahead. In fact, recognizing the long-term effects of inflation can give you a significant advantage in planning for the future. It encourages you to think beyond short-term goals and focus on wealth-building strategies that will not only preserve your capital but also increase it over time. By taking a long-term approach to your finances, you're able to make smarter decisions that allow you to stay ahead of inflation's corrosive impact. Inflation is a force of nature in financial markets, and it affects every aspect of your economic life, your savings, your investments, and even your lifestyle choices. The critical takeaway here is that it's not something you can simply ignore and hope it resolves itself. Waiting too long to adapt means risking a permanent loss of purchasing power and wealth. That's why understanding inflation and incorporating strategies to combat it into your financial planning is essential. Whether it's diversifying into assets like stocks, real estate, or precious metals, or focusing on increasing your income through side hustles and investment opportunities, the key is not to let inflation dictate the terms of your financial future. It's also important to remember that inflation affects everyone differently. While some might feel its effects more acutely, others, particularly those with higher incomes or diverse investments, may be better insulated. However, regardless of your financial situation, understanding inflation's impact on your wealth is crucial. The more knowledge you have about how inflation operates and what assets protect against it, the better equipped you are to build wealth that not only withstands inflation but thrives in it. Strategic investments, such as real estate and stocks, can be an excellent way to combat inflation while increasing wealth over time. Let me know in the comments section below. What do you think of our video? If you enjoyed this video, make sure to hit that like button. Also, subscribe to our channel before you go. Thank you for watching.